Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, April the 25th, 2016. My name is Doug McKay. I'm the founder and head moderator of the Quantum Leap Futures live chat room. Each day we come together in these pre-market sessions to take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you want to come in and check us out, my contact information is quantumleapfutures@gmail.com, or give me a call on my cell, or send me a Skype request at Doug_McKay. You will need Skype for the room. It's easy to do. It's free and takes about 30 seconds to send up. If you like this video, there's over 300 days of these pre-market sessions up on YouTube. Just do a search Quantum Leap Futures on YouTube. And if you like what I do, please follow me at Crazy2 on Twitter. There is no blog. There is no website. This is what we do live in the go-to every day, and then we do live market analysis and trading during the course of the day. So Friday, we were looking for a move down into that 75 area, and then finding responsive buyers and rotating up. And I was thinking we were going to go a little bit higher, but we didn't. We kind of did it in reverse. We went up and failed above that 87, and then just sold off very strongly, found the buyers, but then, it just was very choppy. It was Friday. I wasn't expecting a whole lot of range, and we basically just chopped around into the close in around the 85, 86 area. If you take a look at what we've got going on right now, is since the breakout of the balance that we were in around the 40-50, we've come up and obviously put in a new all-time high at 2105.25. That is adjusted all-time high. The unadjusted all-time high is 2134. And we've been trading inside of this upper distribution, and then we made a breakout. And in the last 8 days, we've got a triple distribution going on in the microcomposite. We broke out, we accepted value in around that 75, then we broke out again, and we went up, put in the high, and created an upper distribution with a small microcomposite, 2-day microcomposite VPOC in around 94, and then since then we've been unable to hold that, and we've come back down, tested the 75 again, came back up, and trying to create value and accept value here at the 86 level. So we have a double distribution with 86 as the microcomposite, 94, basically 93, 94, and 75, 76 as the upper and lower distribution, with 81.50 and 89.25 as the price rejection levels between the triple distribution. I'm going to get into this a little bit more in just a few minutes, but let's go back. Let's take a look at the news first. This is the busiest week of the earnings season, so there's a ton of earnings this week. We've got FOMC statement on Wednesday. It's the end of the month, so there's going to be increased volatility coming into this marketplace. So just keep your risk tight, know where you're wrong quickly, but take advantage of some of the moves that we're going to see this week to make some money. Not a lot of news today. We've got basically new home sales at 10 o'clock. That's about it. So news is going to be light. There is a cup and handle that has formed overnight. Let's just take a quick look at that. This is the cup. This is the handle. It's come down and it's validated. It's working its way back above the 86, the right rim of the cup. our measured move is up to 93, and that takes us back up into that upper distribution of the microcomposite triple distribution. Extended target is 97.75. It does not, this cup does not invalidate until we're below 77. If we're below 77, I'm looking for that 75 area, which is the lower distribution of that triple distribution on the microcomposite. But what I always like to do is start my day off with a basic candlestick chart. I use a 9 EMA, 20 SMA on all my charts. And basically, I start with the monthly and work my way down because I want to know where we are within the trend on all the different time frames. So we've got great slope and separation on this beautiful trend over the last several years. Then end of 2015, we start violating it, took it back, failed in January and February, and March and April, we've taken it back. So we get consolidation in this area. You can see there's the unadjusted all-time high at 2134, and I'm still expecting the 34 to get adjusted and equalized with the new contract. The weekly is very strong on the trend. We've got great slope. We've got separation. Price is paralleling the 9 quite nicely. Longer time frame, we do have a naked cross down here at 1983.75. That should be a long-term target. If we get below the 2016 is what I'd be watching to bring this target into play. And that's because that's that microcomposite LVN. The daily, again, we've got slope and separation. The trend is still intact. We are coming down and testing the 9. Break below the 79. Test of the 20 SMA is going to take us down into 64. Remember that 64 is the gap zone, the top of the gap zone from that breakout. But the trend itself is intact on the daily. On the 4-hour, we've rolled over and we've got a downward trend starting on the 4-hour. We've got slope and separation. We're failing to get back above the 9, which is at 83 area right now. So the trend is down on the 4-hour. On the 1-hour, basically consolidation, but we are below the 9 and the 20 right now, so possible continuation, downward trend, consolidation, a strong move down overnight, a move back, and now we're failing again, and creating this consolidation zone, but possible downward trend coming into the RTH. Same thing on the 30-minute, just basically consolidation. You can see this cup and handle here on the 30-minute too. 15-minute, same thing, cup and handle. We are challenging the 20 right now from above. So we are seeing some weakness coming in on the smaller time frames. 5-minute, same thing. You've got this move up, but failure to hold the 9 and the 20, and now we're back below it. We've got slope and separation. But this cup and handle remains valid until we break below the 77 area. So just keep in mind that we do have a possible cup and handle pattern with the measured move. So taking a look at the structure again. Again, I was talking about that 16. I don't really get bearish until we get back below this 2016, and I'd be looking for a move below this down into that 1983 area, that naked cross on the weekly. Right now, again, we're in this triple distribution with the microcomposite in around 86. We're trading right at the price rejection level of 81.25. Below 81.25, I would be looking for a move down to 78, and then the overnight low at 74, and intermediate strong target, which is the 3-day microcomposite VPOC at 75.75. Above it, I'd be looking for us to come back into balance in around 86. That 85, 75, 86 area has been pretty powerful. And then we've got price rejection up in the 89 area, 89.25. Look for some resistance there, if we don't hold below it, a move back up into that measured move at 93 and the the upper distribution 8 microcomposite HVN at 93 and a quarter here, and then possible continuation back up into the 2100s. We need a pullback. It's we haven't had a big pullback. It's unhealthy. This pullback is actually going to be good for the longs, and as long as it holds, I wouldn't even care if it pulled back right into the composite VPOC at 6150. Remember, we've got the gap zone. We've got this gap zone right here. The top of it is that 64. Middle is basically the 61 and a quarter composite VPOC, and then the lower side is 58.50. This needs to be tested from both sides to get it taken out and completed. But right now we haven't come back down to test it since breaking through it. So taking a look at the overnight. Overnight, obviously, we opened up with a large gap up, Globex gap. We came down and closed the gap, and they just basically sold it off until we got into European session. The Europeans took it back up, rotated back into balance, in around that 85, 86, and since then we've chopped around there, and we're coming back down and testing some of the lower. Very ugly profile again. I mean, there's been no real pretty profiles as of late. We do have an LVN at 80. I'm going to be using that 80 to 81 and a quarter as a trade level today, an important one. And you can see that the lower HVN overnight is down here at 77, which is also the Globex developing value area low. The VPOC is up at 84, and then we've got this HVN up here in the 87 area, but it's pretty messy. The overnight inventory is net short to neutral, so below that 80 area, I think you see some pain for some of the longs, and could get flushed. I'm sorry. Could be squeezed pretty quickly. So let's just take our levels and put them out. Our overnight low is down at 74. That's basically 4 ticks below Friday's lower. Can't talk today. Friday's low. Our overnight high is up at 91.50. So we've basically had an engulfing Globex over Friday's session. Currently right now, the VPOC, I don't think it's going to change, is going to be at 84. And then we've got this LVN at 80, the microcomposite LVN at 81 and a quarter. And we had a LVN on Friday. We had a double distribution on Friday. This is going to be my main trade level right here between the 81 and the 80. Basically my key line in the sand. Why did that do that? Below the 80 level, I want to be short into the 77 and 75. Above here, I want to be long into the 86 and the 93 area. So above, we also have a value area up here at 87. Now, 87, 75, and 89. Remember, the microcomposite LVN is 89 and a quarter. So I'm going to actually use this as a complete area, kind of a slush area. I don't want to be long unless I'm already long until we're above 89 and a quarter. And then I want to be long into the 91.50 and the main target above, which is going to be, I'm going to use 93 versus 94, but you could use the 94. This is my main target above. And then we have right now our daily ATRs is running, our 20-day daily is 2181. So our daily ATR upside target is up here at 96. We have that range high from Thursday up at 89. That's going to be a trade level for me. I'm sorry, 89, 98. Dyslexic this morning. And then above 98, we have 2175. And then our new all-time high up at 2105 and a quarter. And then we have some measured, there's trade area at 2110 for the rule of 10. And then we have some measured moves above. We've got nothing else to guide us because we don't have any structure up there, but we do have some measured moves at 2115, 2126.25, and then we've got that unequalized all-time high up at 2134. I don't think we're going to get there today, so it's not going to be a big factor, but just bringing in the levels above so that we know. And then below us, we have the microcomposite LVN, can't talk today. Our value area low from Friday at 79. That is going to be another trade area for me. And then below there, 77, 75, 75. It's actually going to be a trade area for me as well. And then below that, we have the overnight low at 74. We don't need this. Let's just move this over and bring this up. So we have the CHVN and the former microcomposite VPOC is also down at our daily ATR target down here at 69.75. So, below the 81, I'm looking for a move down towards the 69 again, because we've been down to 74, 75, 75 and bounced already. On Friday, I'm not anticipating that we're going to find the same buyers down here at the 75s again. I think we're going to have to come down lower, down into the 69, if not into this gap zone that starts at 64. And there's a ton of repair we've got to take care of down between 64 and 58. Okay, and then below the gap zone, we've got the composite VPOC, we got the microcomposite, the longer time frame from the fourth quarter. That microcomposite VPOC is 63.50. We've got the all-time most traded price going back to the beginning of 2013, just below it at 61.50. We've got a naked close at 60 and a quarter. And then we've got 56 and 58. 58.50 is the bottom of the gap zone. Usually when you get down to into the gap zone, you'll traverse the gap zone, and especially with the fact that we've got naked close and naked VPOC at 20.55. So those are the levels. Now, how do we trade it? Well, what I'm looking for is we're going to get an open auction in range and in value if we hold. We still have 25 minutes thereabouts, so we could get out of value, but we're going to open up most likely inside a range. I'm going to be looking for a lot of chop this morning. My main hypothesis is to open and chop, possibly come up into the 86 level, find responsive sellers, and then come down, break out of value and come down and take out the overnight low and come down and test the 69.75, chop around here, and then start walking our way back up towards the 2100. So main hypothesis is chop on the open, failure somewhere inside of value, and then a move down through to take out the overnight low and take out the Friday low and come down into the 69.75, chop around here, possibly come down to the 64, and then bounce and move our way back up. That's my main hypothesis. My secondary hypothesis is almost in reverse. We open and chop, we come down and take out the overnight low, and somewhere between 69.75, we bounce from there and rotate up into the 90s again. So kind of similar, but the move lower first and then up versus the move up and then lower. My third hypothesis is we open, in range and we chop around for most of the morning, filling in the lower volume area between the two distributions on Friday, and then we break out later in the afternoon up to take out the overnight high and go and test the upper distribution of this triple distribution and the microcomposite up and around 93. So that's what I'm looking at in terms of the ES. Gold is back. Remember last week I said that we're not going to get away from that with the composite shift back. This composite VPOC, where the most traded price, goes all the way back to October of 2008. And it was down here. We came up and chopped around. It shifted to 1235.30, and then we tried to break out. I said look for a move back towards the 1235.30 because we're not going to get away from it that quick. And we came down, and so far I expect there's going to be a lot of chop in this area as we trade around this magnet. So gold's kind of off my radar chart right now until we move away from this 1253, because it's going to be too difficult to try to trade this chop. It's going to get very volatile in gold this week. I'll start considering gold again when it gets above 54.90 or below 26.30 as a possible vehicle to trade. But as long as we chop around this 1235, it's going to be very difficult. I mean, you could scalp it, but that's about it. And I don't have time to scalp gold. Looking at the Keltner, our Keltner center line is at 82. Our overnight VWAP is at 81.50. We're below. Here's the move down towards the 77 area. Our value area low for the Globex is at 77.50. So below that 81 area, I'd be short right now in towards that 77. A move above move to the lower Keltner is going to bring us into that 75 level. And then if we do get above the Keltner center line, a move up to the upper line is going to bring us into the 87.75 area. So that's basically what I'm looking at. That's going to complete our pre-market live session. As always, trade well, trade safe, and we'll catch you on the flip side.